This news, too, U.S. stock markets will start the day in a long-awaited correction. The Dow Jones Industrials fell more than 1,000 points yesterday for the second time in a week. The Dow had its biggest ever one-day point decline on Monday. The index is down more than 10% from an all-time high of more than 26,000 2 weeks ago. Kenneth Rogoff is a former chief economist at the International Monetary Fund. He's now a professor of economics and public policy at Harvard. Good morning. I know you've said that what we call happening is a recalibration, not a catastrophe. How would you explain this volatility?
Well, it's gone up really fast, like gangbusters for a while, so it's hard to get completely worked up about the fact it's gone part way down. Nobody quite knew why it went up so far, but I think the news is good. The global growth is very strong. U.S. growth is strong. Profits are strong. Wages are up. But I think what investors are nervous about is interest rates might start going up. And stocks have been the only game in town. You put your money in bonds, you get nothing. And now some money will shift out, and housing mortgages will be more expensive. So that's, I think, the fear.
Mm-hmm. In Washington this week, there was another debate about spending. Rand Paul kept everybody there late last night talking about the debt and deficit. Is there going to be any connection between that and these big numbers we're hearing and possible interest rates going up that might hurt the economy?
You know, it could come down the road. So we could see pressure on the Federal Reserve not to raise interest rates because it's painful for the stock market. It's painful for the U.S. government. So far, that's not what's going on here. I mean, let's face it, it's been sort of a circus in Washington for a year, and the stock market just goes up and up. So to say that it's craziness in Washington that's driving the stock market down is kind of a hard case to make. No, I think it's really a good news story, but the fear that interest rates will go up, and maybe stocks aren't the only game in town.
You say it's a good news story, but a lot of people, Ken, still are very worried and a little freaked out, to use a technical term. So what attributes do you think investors really need right now during this time? So
it's really hard around the stock market is when it's going up. You want to say, oh, I'm missing the boat. I should mortgage my house. I should put everything in. And then when it's going down, you go, oh, my gosh, I've got to pull everything out. And the small investor, most of us, just get creamed by this. It's hard to second guess things. If everyone knew the stock market was going down another 10%, it would drop like a rock today. But maybe it'll go back up. So it's very hard advice to follow. But to try to stay calm, sure, look at your portfolio, but maybe not right now in the middle of the storm.
At the same time, you point out the fundamentals of the economy are good. Corporate earnings are expected to be anywhere between 8 and 10% and continue. All of that, great. What about, and this is following on John's question, that the government will have to borrow about $1 trillion. Who's going to buy that debt? What countries?
Well, for the moment, everyone wants to buy U.S. debt. The dollar's king in a way it hasn't been since the 1950s. Now, that could turn. If global interest rates go up, and we don't really know why they've come so low, it'll get painful. Politicians will have to do stuff. They don't seem very good at that. So it could go wrong, but it's probably not something that's happening overnight.
All right. Thank you, Ken.
Right.
Thank you.
You're so calm and steady. I'd like to know when you start freaking out, Ken. I want to be there when that happens. Yeah. Thank you very much.
Thank you.